Hey everyone, it's Andrew. Welcome to Atomo. It is May the 3rd. It's almost May the 4th. May the 4th be with you, almost. By the time maybe you're watching this, it will be May the 4th because I tend to do these later at night. So, banks, and more banks. We're continuing on yet again with all our banking. I was going to call it shenanigans, but is it really? Do we really have shenanigans going on right now? Let's take a look here. Going to an older article, you notice that this is a Reuters article from 2021, and this goes back to, well, BlackRock, and there's questions from Elizabeth Warren, a longtime Wall Street critic, of course, because you know commies don't like Wall Street. So you try to use it to your advantage. Why BlackRock and other large asset managers have not been added to the list of designated institutions, like the SIFI, systemically important financial institution. And back in the day when interest rates were nice and low, and BlackRock's able to go and just get easy money, throw it all over the place, get some more AUM, assets under management, then why do you want to deal with pesky regulations? Okay. So, and the information that they're putting forward here, I believe it's important to look very carefully at the risk posed by the asset management industry, including BlackRock and other firms. Okay. I think that with respect to asset management, rather than focus on designation of companies, I think it is important to focus on an activity like that and consider what the appropriate restrictions are. So, BlackRock is not a bank, and as an asset manager, we are a heavily regulated company. Well, there are regulations, but here's the key point: is a CFI designation for BlackRock would bring up more regulation and compliance costs, results in potential restrictions on share buybacks. And this is someone, Kyle Sanders, brought that up, an analyst with the St. Louis-based financial services firm Edward Jones. All right. So Yellen, however, said it's appropriate to apply the CFI designation to institutions whose failure would pose a systemic risk to the economy. She said the FSOC, I think the Financial Stability Oversight Committee, has begun working on a program, and the risk from asset managers is on the issue to be looked into. So it's almost like that's her speak for saying, yeah, okay, we hear you, but you know what? BlackRock slid their manila envelope onto my table that says, let's not go there. You're going to increase our costs and put us under more regulatory shackles that we don't need to have right now. So where does that put us? So there is a hunch, and of course, no financial advice here, not giving any, I'm just talking about BlackRock and providing some opinions, that, well, now that the interest rate environment is going really high, and we saw that Jerome Powell did another 25 basis point hike, that was getting priced in. Stock market was saying, yes, that's definitely going to happen. Maybe not necessarily the stock market, but there were indicators out there that they're pricing in 25 basis point increase. And of course, the Fed is like, to firm or not to firm? That is the question. Firming just means, are they going to keep rates at this level, or maybe have a little more upward trajectory, maybe, or at least just, we're going to hold here at 5%, because usually at 6%, it was being told that's when things break. So anyhow, with these rates so high, then for BlackRock, especially as a lot of the loans come due and they have to roll over their assets and the funding underneath the assets, that's coming at a higher price, which means they can't get the yields on these assets that they used to when we're close to the zero bound. So what's the potential problem? Well, the potential problem is BlackRock, which is running maybe $50 billion or something like that, as far as, well, they got trillions assets under management. They only have so much running room for the actual operations of their group. So if there's any sort of systemic problem, they might have to start offloading assets. It says back in the article here that BlackRock manages about 8.7 trillion in assets on behalf of institution and individual clients worldwide. And that's an older number. Okay. Now, given that there is potential risk to BlackRock due to the rising interest rates, and BlackRock is a part of the Davos crowd. That is their faction. They are not a part of the New York Bank faction. So, if, and I, in the previous video, I talked about the game of Battleship where we're firing salvos at each other, and I pulled up one of those bingo cards of failing banks that you see on Twitter that people are sharing. They're putting their banks into particular areas and crossing them off. As the banks get into distress, then potentially, when we look at BlackRock, if they're going to have problems, well, wouldn't they start knocking at the door and say, oh, could we please become a systemically important financial institution? Can we get this designation? And well, how best would BlackRock, which is not a bank, get this designation? What if they were to pick up a bank for pennies on the dollar? So we saw, let's flip over to this one here. Here we go. Pacific Western Bank. Explore strategic options amid stock price come. Oh, continue support. Blah, 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 blah. Anyhow. So here we are now. We got PacWest Bankcorp, and Bankcorp founded in 1999, relatively new group. I think it was formerly known as First Bankcorp 2005. I believe there was some acquisitions that were happening back in the past. But anyhow, they are okay. Shares of the company dropped 37% on March 10, 2023, in response to the collapse of Silicon Valley Bank. On March 13th, share trading was halted after a fall of 52% on the day. On May 3rd, shares fell 57%. So we got a new update here in after hour trading. After hour. Okay, so after hours tends to mean if there's problems and that bank is left to go after hours, then this is probably not a bank that is on the Fed's friendly list. If the bank starts to fail during hours and remediation occurs, it's potentially on the Fed's friendly list. So something to look at when we're analyzing these bank failures, because we want to play the board game, tabletop game of, well, whose banks belong to which faction. We have a New York bank faction versus the Davos faction. This bank here, PacWest Bankcorp, it looks like based in Beverly Hills, California, probably a Davos faction bank. Okay, so What does this have to do with the thesis? Coming back to this group, BlackRock, they want to become a systemically important financial institution, become a bank. How to best become a bank? Buy one for pennies on the dollar. So perhaps if a whisper campaign or little manila envelopes fall on somebody's table and says, you know what? Perhaps it's time for us to put PacWest Bankcorp into play and to potentially get the meat tenderizer out, bang it up a bit, get the stock price to go down enough that perhaps a group like BlackRock can jump in, take the bank, not add it to assets under management, but add it to their actual, integrate it with their actual business and move from being um, kind of an institutional investment house to an actual banking house with an investment arm. That would be a big change for BlackRock, and then they can come and say, "Hey, look, we should be a significant, we should get the CFI designation." And then, should the assets under management start to collapse, this is the big thing. If those assets under management start to break down, then we'll go to the US taxpayer and say, you got to help BlackRock in the tune of potentially multiple trillions of dollars, worst case, a significant amount of their portfolio. And that will put definitely, if the Treasury goes in to give them protection, then they have to get that money from somewhere. And most likely that would force the Federal Reserve to come in with printing presses going. So there's our thing to consider. Would BlackRock become a CFI? They just need to get a collapsed bank, add it to their and merge it to their organization, then go to Janet Yellen, say, please make us a CFI organization, which most likely she will oblige. And then BlackRock can cut loose some of their assets under management, raise their arms, cause a ruckus, and get the U.S. taxpayer to start bailing them out, in which the Federal Reserve will start to print and cause more chaos, as you see in the background behind me. The administration in the executive branch of the U.S. government right now, they're acting like vandals. And this behind me is what's happening when you have vandals running the show. So, again, this is just my opinion. I don't get any information. I have no back channel information. Just trying to read tea leaves here for what it's worth. So, take that for what it's worth and stay safe out there.